So, blow off top or bubble pop? That is the question that's on everybody's mind at the moment. Bitcoin is holding solid at over $100,000. The S&P and the Nasdaq have been in roaring form in recent weeks. Some bears are starting to look a little bit silly, but is that a sign that the market is about to boom? Or are we in the final phases of a bubble that is going to end very, very badly for equity and crypto investors? Well, if you want the answer to those questions, stay tuned over the next 20 to 30 minutes as we dig into some technical analysis on Bitcoin, the S&P 500, and obviously we take a look at the state of the altcoin market. Before we get into it, please do hit the subscribe and the like buttons. And if you haven't done so already, please follow me on X through @PartTimeCharts. And also a brief reminder that nothing that you hear on this channel or that you might see over on X constitutes financial advice. Right, let's get into it. So I'm going to kick off this week. Lots of you know, if you've been following me for a little while, you know that I absolutely love this chart. This is the Grayscale Bitcoin Trust chart. And the reason I like this is because this is a good proxy for Bitcoin. When Bitcoin is going up, so is this chart, and vice versa. But what we've seen is that over the last few years, this chart behaves slightly differently to Bitcoin. And what is forming on this, so remember, this is the kind of forerunner in the ETF space. This is the original way for people to gain access to Bitcoin through standard investment accounts and pensions, etc. And what we've seen since the 2017 top is that we have begun to form this rising wedge formation on GBTC, the Grayscale Bitcoin Trust. And to me, that is not conclusive evidence that the market is heading lower, but the price action is so clean, with price being capped by this upper trend line here and supported by this lower trend line here, that first principles, I just cannot get bullish at major resistance. So this trend line has held since 2017, so for 8 years now. And if we look at the monthly chart, which is where we are at the moment, we can see that since early 2024, we've made a high, a higher high, and another higher high, but the RSI has not followed. So we've got these highs here, followed by lower highs on the RSI. And normally, you know, I'm not a fan of single indicators. With the RSI, it's very possible that we break this trend and that the RSI starts to push higher. But the combination of waning momentum indicated by the RSI on the monthly chart, remember, the higher the time frame, the more powerful the indicator. The combination of the RSI indicating waning momentum at the same time that price heads into major resistance, and everybody in the crypto space is extremely bullish. All of the billionaire shills are out in force. You've got Shamat, Michael Saylor, a whole bunch of people trying really, really hard to convince you that Bitcoin is going to $500,000 over the next few months. I just think all of that sends red flags my way. I have been around long enough to remember 2017 when people like Novogratz were calling for $100,000 Bitcoin, and we hit 20,000, and they continued to push, and the price completely collapsed by about 85%. So none of these things on their own are strong enough indicators to suggest that we're about to enter a major correction, but the combination of all of those factors just tells me to be cautious. So even if you do not believe that we are about to crash, and this is for me, this is a technical projection based on both the pattern that we're seeing, the kind of price action that's unfolding, the waning momentum on the monthly RSI. I do believe we are about to see a really, really significant correction in the price of Bitcoin, one that will catch many people off guard and in hindsight will look absolutely phenomenal. But even if you don't subscribe to that view, even if you are bullish on Bitcoin, come on guys, is this really the time to be bullish? You know, heading into macro resistance like this on the monthly chart, I just do not think you are justified in being bullish up here. And with the monthly close yesterday, we have confirmed another lower high on the RSI while price makes a higher high on the monthly time frame. And it is a similar story on the BTC USD chart. Again, you know, upside capped by this trend line that dates back to 2021. And everybody is super bullish up here once more. But again, with the monthly candle close yesterday, where does that leave us? Well, it means we have made another higher high on price while making a lower high on the monthly RSI. So look, you can disagree with me. You know, when I forecast price going back to $3,000, and I know a lot of people think I'm crazy, and we'll get into the reasons in a second why I think that is on the cards. You can disagree with that, but still be smart enough to see that this is not the place to be bullish, in my view. So you make your own calls. You got to do what you got to do as an investor, as a trader. But for me personally, I find it very, very hard to be macro bullish up here. Yes, we could get one final swing at the all-time high, and I suspect if we did take out the high at kind of 112, 113,000, everybody would get super excited again and they would be mocking the bears. But I still believe that a major correction is on the way. And what other signals are there that can help us to determine whether that major correction is coming? Well, look, before we get into lower timeframes, let's take a look at the higher timeframes on the S&P 500. And again, I've pointed this out before, but just a reminder where we are, right? This is the 3-month chart. We have got waning momentum indicated by the 3-month RSI. Again, another 3-month candle that looks like it's going to be a higher high in terms of price and a lower high on the RSI, added to the waning momentum that we see here, dating all the way back to 2018. But if that's not enough, we are butting up against a 100-year trend line that dates all the way back to, ironically, the Great Depression of 1929. So again, I ask myself, you know, lots of people are pushing this theory that we're about to see a blow off top, that markets are irrational and they're going to continue to be irrational and continue to make bears look silly. And look, that is absolutely a possibility. But while we are butting up against 100-year trend lines that have held steady like this so far, I just think the likelihood of that feels relatively slim. And the ultimate clue in my book is this, and I've talked about this before, but this is the yield curve inversion. Sorry, let me go back. This is the yield curve. So this is US 10-year Treasury rates minus US 2-year Treasury rates. And what happens when you get these periods of yield curve inversion where we enter into negative territory is normally that this is a flag that there is major systemic risk building up in the system, because you should not expect to be paid more for short-term lending than you are for long-term lending. And when the market signals that there is something majorly wrong in the system in the way that it has done on these last 3 occasions, normally that is a sign that there is a correction pending, something really significant in the stock market. And I know lots of people say this is not a foolproof indicator, but if you run the data back, and unfortunately I can't bring this data up on TradingView, but if you run the data back, you know, you can go back all the way to the 50s and you'll see that this pattern is pretty reliable, pretty consistent. It is a great indicator for forecasting trouble ahead in markets. What it's not good at is forecasting the timing of a potential correction in the stock market. So you can see back here we had this inversion back in 89, 90, and it led to a correction in the S&P. Likewise, you can see the last 2 really big crashes that we experienced in my lifetime in the markets. The first in the year 2000. I was too young to be worrying about markets back then, but look, if you were clever enough to have spotted this yield curve inversion, it would have given you the warning sign that the market was about to top out. And what happened was that the S&P went from about 1,500 down to a price of about 800 over the next couple of years. And then the great financial crisis, the one that many of my generation remember, your first kind of experience of a bloodbath in the markets. We saw again a period of yield curve inversion, but it took some time. The market kept climbing higher as the yield curve was inverted, and it took some time for the yield curve to both disinvert and trigger the kind of rolling over that we saw eventually in the stock market. But when that did happen, you look back here, this was the top of the market in October 2007. And what happened over the next couple of years was that the market went again from 1,500 to a sort of double top on where we were in the year 2000. And we made a lower low at about $700. So really, really significant crash in the stock market, one that has been talked about for close to 20 years since. And this yield curve inversion was a great predictor. Now, again, it didn't help you pinpoint the exact time of the move. And if you were selling out of the stock market when prices were low, when the yield curve inversion existed, then you would have been made to look like a bit of a fool for some months. So if you were selling out here for the next 6 months, the price of the stock market would continue to climb higher. But look, in the rear view mirror, right, this climb from 1400 to 1500 looks so insignificant when you consider that the crash that followed was a 50% move to the downside. And then we come forward to the present day. Now, just look at the scale of this, guys. I've talked about this before, right? These periods of yield curve inversion were relatively shallow and relatively short-lived. But what you see here from the year 2022 through to late 2024 is the deepest and longest period of yield curve inversion that we have ever seen. Now, what's happened as that yield curve has disinverted? Again, bears have been made to look silly. So the stock market has continued climbing from 4,000 up into the heady heights of 6,200 where we are today. And lots of people will look at that and say, well, you know, it just shows you that this is a useless indicator. On the contrary, my belief is that this indicator is not particularly helpful at helping you to pinpoint the exact time of a decline in the stock market, but it does indicate that risk is building up in the system and that you should be cautious about your exposure to equity markets. So that is the way that I'm reading this. And just purely coincidentally, I'm not saying that you should read too much into this, but interestingly, the yield curve had disinverted back to about 0.5% at the exact moment that the stock market topped in 2007. And where are we today? The yield curve has disinverted back to 0.5%. So all I would say is, just because the stock market has gone up a fair bit recently and has looked really strong off the bounce since kind of April time this year, that doesn't necessarily mean that investors are out of the woods. If you are advocating for a blow off top, that's absolutely fine. And I can understand why, if you look back historically, something like the dot-com boom, we did get this ridiculous phase at the end of the market cycle where everything just went vertical and the Nasdaq went up by about 100% over a period of about 9 months. And I understand why people are calling for that again. But for me personally, I look at this and this is a big warning sign. If you go back to the final phase of the dot-com boom, where markets, the Nasdaq in particular, doubled in less than a year, we were around here. We hadn't seen a period of inversion anywhere near the kind of scale and depth that we have seen in recent years. So to me, the question is, are we in the early stages of a blow off top, or are we in the early stages of a market top? And for me personally, my money is on the latter. I believe that this yield curve is going to continue to disinvert and that is going to apply pressure on equity markets that eventually they will succumb to. And then I'll just go back to the lower time frames on the S&P 500. So look, I know people have been really excited. We made this low, and this is a pretty significant decline. I think we were down about 20% at one stage. So look, market declined about 21% in the space of about 6 weeks. And, I honestly thought I'd nailed the top. I was calling the top all the way back here, late 2024, early 2025. And when this started to roll over, I knew that we would bounce at some stage, and we came down, we took out these lows, I expected us to come up, make a lower high before rolling over. The market has made a higher high. We're now at new all-time highs on the Nasdaq and the S&P 500. And I think lots of people believe that that is a signal of market strength and that the markets are going to be propelled higher over the rest of this year. And look, that is certainly a possibility. You don't rule anything out. If you're smart when it comes to trading and investing, you know that anything is possible. But all I would say is, if you flick back to 2007, just before the great financial crisis really set in, we saw very similar price action, didn't we? So we came down here, came back to these lows. I think this was a decline, a bit smaller than what we've seen recently, but still significant, a 12% decline in the space of about a month. And then what happened was buyers stepped in, bears were caught offside early doors, and the market drove higher. And I wasn't following markets very closely back here, but I can imagine the kind of emotions that were involved at this top, as a lot of bears were caught offside. They were forced to close short positions. You know, hedge funds were being forced back into longs because they believed that these highs being taken out meant that the market was about to press higher. And what happened is that eventually price just started to roll over, weakness returned to the market, we got back underneath these highs, and it didn't happen overnight, but what happened was slowly over a period of about 3 months heading into Christmas of 2007, price just began to show weakness, began to make lower highs and lower lows on the lower time frames, and then eventually, well, we all know how this story ended. The price rolled over in a really big way, and what we got eventually was some small declines, again all pretty stable, and then massive capitulation into 2008 and 2009. So would it surprise me if price started to roll back over, and then over many months heading into 2026 we saw this kind of price action that eventually saw the much bigger decline that I've been expecting for the best part of 6 to 9 months now? Not at all. This would not surprise me at all. And so when people call for a blow off top, I understand the logic, but I just think so many people would be caught offside if the market started to trend lower. We see there are all sorts of data points out there, but you know, retail exposure is at all-time highs to equities. Concentration in the US stock market is at all-time highs. I think lots of people are really exposed to US equities, and when everybody is on one side of the ship, normally that means that we're about to sink. So I personally, my money is still on a significant market decline. I know that many people will say that this bounce has negated a lot of the analysis that I've put out in recent months. And yes, we have bounced higher than I thought we would, but I'm sticking to my guns, guys. I really believe we're on the brink of a major decline. So that is Bitcoin, the S&P 500, the yield curve, all pointing to risk of a potential correction in the markets. What about the state of the altcoin market? Well, look, I'm reasonably confident that this is not the time to be bullish Bitcoin, and despite the kind of price action that we've seen in the equity markets, I also believe that there is a lot of risk built up in the equity market. The one thing that I am very confident on when it comes to my analysis is that we are not on the brink of alt season. I know lots of people are excited about the relative strength in BTC, potentially indicating that the time for alts is on the horizon, but I just don't see it. And I'll give you a few examples, and I'll take a look at a couple of meme coins, you know, and the reason, look, you can cherry pick, right? So there are thousands and thousands and thousands of altcoins, and I think to some extent that's part of the problem with the altcoin market. It is just so stretched and it's just so full of crap right now. But if I look at some of these altcoins, particularly these memes, you know, we've got something like Floki, which has had this upward trend holding all the way back to the bottom in 2022. And again, you've got multiple hits on this trend line, and every time we hit it, we had a small dip under it here, a reclaim and a rally higher. But we're back at this trend line again. And I just think if this market was really bullish, you know, if this was going to be the false breakdown that led to significant upside, then when we got back up here at this range low, price should have reclaimed and then headed higher. And the fact that that hasn't happened, the fact that all we've done really is retest this range low off of this false breakdown and then come back, and now it looks like we're weak again at the point of hitting this uptrend. I just think there's a major warning sign, and this is higher time frame stuff. This is the weekly chart, and this trend line goes all the way back to 2022. I do not like the state of altcoins, and you can see that again here on SHIB, Shiba Inu. You see this trend line that has held again all the way back to 2023, and every time prices hit it, we've bounced. But what's happened recently, earlier this year, the trend line gave way. We've back tested it as resistance. We've also back tested this huge support and resistance zone here, and price has been rejected, and we're now back down here. We're making lower lows for the first time in a long time on the weekly. So we've made lower highs here, so high, lower high, lower high, and now we're seeing low, lower low, lower low. This is not the sign, in my view, of a healthy market that is about to boom. This looks like a market that is on the brink of absolute collapse. I'm being totally honest with you. And no matter how you feel about Bitcoin, the fact that it has held strong in recent months, the fact that equities have bounced, the fact that in amongst all of that, altcoins like this just cannot catch a bid and continue to grind lower, it's a big warning sign. Because if Bitcoin does start to roll over, if the equity market starts to roll over, there is going to be no buy-side liquidity for these coins. They are absolutely worthless. And I know lots of people have drunk the Kool-Aid on crypto and believe that people like me who are bearish, are simply bitter that we've missed out on life-changing gains or whatever. Just put all of that aside and just look at the price action. This is telling you that this is not a healthy market. And yes, could we drive up one more time and come back into this region? Absolutely, tops take time. But longer term, I truly believe that we're going to see a decline that is going to catch so many people off guard, that altcoins will be down between 95 and in some cases 100%. Some of them are going to zero. And, when I look across the market, and again, this is just a smattering of alts that I've been following. So Lido, lots of people are bullish on Ethereum at the moment. And I look at Lido as an indicator of what kind of strength there is in the Ethereum ecosystem. And again, all I see is 3 years of distribution. These levels are so clean. In fact, I drew this chart way back in, I think, early 2024, late 2023, and I've barely touched it since. And during that time, look at what's happened. These lows here are really fascinating to me. We've got these lows, this support zone that has held on so many occasions. This looked like a deviation when we reclaimed here. Lots of people were saying we were going to head higher. To me, it always looked like a trap. We've headed back under. And I suppose the key question for me is, I'm asking myself, if this market was really bullish, if the ETH ecosystem was about to take off, if we were on the brink of Altseason, would price be holding back under these lows? Following all of this accumulation, if this was the false breakdown, would price be back here so quickly? I just don't think so. I think this is a sign that there is very little interest in altcoins at the moment. And eventually, we're going to see the kind of decline that most people think is impossible. I think this one, actually, my forecast, despite being, 10 cents when the price was all the way up in the 1.4 region, I still think this probably wasn't bearish enough. And I do genuinely think a lot of these altcoins are going to go to zero and they're never coming back. But even if you disagree with me, if you look at where I made my first call, where this support zone here gave way, this breakdown here on the weekly was where I called for much lower, and we're down 50% since then. So people can continue to mock, they can continue to ridicule some of my analysis and my price targets, but if you're an altcoin holder, I'm sorry to say, you're just getting hurt. I mean, there's nothing that is positive about this. If you were buying Lido anywhere in this range over the last few years, you are significantly down on the value of your investment. And if you were lucky, you were buying at some of these lows and you're down 20% or so. If you were unlucky and you were buying up here, forget about it. You're down 60-70% already, and the market looks like it wants to head much lower. So this is why I'm being cautious on altcoins. This is why I'm preserving my capital. This is why I'm much more interested in commodities than the altcoin and the crypto market right now. And then let's go to Ethereum. This is possibly the only coin out there at the moment that I'm not 100% clear on. I know what the crypto market is like. There is absolutely a last push that could take something like Ethereum back to the highs and take out some of these highs. I've said for a while that I don't like the fact that these highs are so clean. If we were going lower, ideally, I would have liked to have seen this high get taken out properly with a push up here before price rolled over. That said, that doesn't have to happen. I have been bearish for a long time. I was bearish all the way up here. Price came down and collapsed into this $1,400 region. We've seen a big bounce. And the question for me is this the sort of first big drawdown and the first major lower high before the market starts to roll over? So are we going to see something like this, which would match the price action that we saw back in 2022? Or is this a reclaim of a really key level before price pushes higher and comes back up to take up these highs at $4,000? I don't have the answer right now, but I know how I would be looking at playing this. So first things first, it's hard to be bearish while we're back above this red resistance zone here. So this has held us support and resistance so many times in recent years. It's a really key level, and the reaction that price gave us off of this level when we came down for the back test a couple of weeks ago indicates that there are buyers willing to step in at this level. By the same token, this green zone is a really key support and resistance zone, and I cannot be bullish until we clear that and potentially reclaim this broken downtrend. So at the moment, if you're bullish, this looks like a bullish reclaim. If you're bearish, this looks like a back test of a key SR level and a broken trend line. For me, this whole area here feels like we're stuck in no man's land. I would not be taking a trade here. I would be waiting either for a break up and this area at 2,800 starts to hold as support, or I'd be waiting for a breakdown and we get back underneath this support and resistance zone at 2,100. Either way, those would be the triggers, either to go long back to the highs or to go short back to these lows. So inconclusive is my conclusion on Ethereum at the moment. But looking at the broader trend across the altcoin market, looking at the kind of macro position I see for the S&P 500 and for equities, if we do see upside and we come back into this $4,000 region, that for me would be a great area to take profit and on the longs. I do not believe that we would see a sustained move up into the $10,000 region as most people are claiming. And I still think there is a pretty high likelihood that this is the first lower high that we see on Ethereum. And potentially is the macro signal that we're about to go much lower. So let's wait and see. Either we get back under this support and resistance zone and that will open the door for much lower prices, or we will reclaim 2,800, which has so far been holding as resistance in recent months. A couple of other charts just to wrap up. So look, what have we established? One, that the yield curve is pointing to major risk in the equity markets, and that if that risk manifests, we are likely to see a significant decline in the value of stocks, which will take Bitcoin with it. Alongside that, regardless of whether Bitcoin remains strong over the coming months, I just cannot see a world where we see Altseason. I think way too many alts look weak, and yes, they could have one more bounce, one more last hurrah if Bitcoin remains strong. But broadly, on a higher time frame, I expect altcoins to continue to suffer. And this chart here, which is others, so small cap cryptocurrencies versus Bitcoin, is telling me exactly that. You know, for some time now, back in January 2025, I flagged that altcoins were about to get hit hard versus Bitcoin. And what has happened after this big fake out, this big wick here on the 2-week chart, I said, look, I don't like the look of this. I don't like the fact that we're being rejected at resistance and that we've seen a lot of buyers, a lot of excitement absorbed on this wick. And what has happened? We have followed my blue squiggle perfectly. And now, in addition to us looking like we're going to revisit the lower boundary of this falling channel, we have now flipped this key support and resistance zone back into resistance. For me, the most logical target would be to come back to these lows here. And I believe we will do that. It's not going to happen overnight, but over the next couple of years, I do believe that we will do that. And eventually, look, eventually I expect altcoins to outperform Bitcoin. But when I say eventually, I'm talking about from 2027 onwards. I believe there is a lot more pain to come. Alts are going lower. Bitcoin is going to correct in a major way. And the charts are undeniably telling me that at the moment there is no reason to be bullish on altcoins. Now, if this changes, perhaps we hit the lower boundary here, and we come back up and we flip the downtrend and we flip this SR into support again, then here is where I might think about being bullish on altcoins. But until that happens, I see zero reason to be optimistic on the future of altcoins over the next kind of 6, 12, 18, possibly even 24 months. I think this market is heading much lower, and altcoins are going to continue to bleed out versus Bitcoin and go lower against USD. And one final chart for you. Again, I love finding charts that give me a clue on the overall state of the market and give me some really clean price action to work with. And this is AVAX BTC, and I love this chart. One of my favorite patterns is this descending broadening wedge, and we see that here. You've got this wedge forming over a really high time frame dating all the way back to late 2021, so the end of the last bull cycle. And look at what AVAX has done relative to BTC since we saw that kind of euphoric top in 2021, 2022. It's just bled lower and lower and lower. And if you were bullish on altcoins back there, you know, your AVAX is already down 93% versus the value of Bitcoin over that time. And I see no reason for this trend to come to an end soon. I believe that eventually we will come back and we will test this lower boundary, and AVAX will continue to grind lower, potentially into 2027 before we eventually find a bottom. We maybe take out these lows here, we reclaim. And what happens, you know, I know lots of people see me as a perma bear, but what happens when we eventually bottom is that I believe AVAX is going to go absolutely berserk versus Bitcoin and lots of other altcoins in the market. So this is one that I am watching because I have a real vested interest in AVAX going lower, because if it does, boy, oh boy, oh boy, I am going to be ready to make some big buys. But for now, you know, looking objectively at price action, I just cannot see a reason to be bullish here. If we were to reclaim this zone here, this support and resistance zone, so for price to come back and start holding here, maybe that would be a sign that we're about to go higher, and certainly a breakout of this downtrend. You know, that would be a trigger here or a trigger here. But until that happens, all I think we're likely to see is sideways and down on AVAX BTC before eventually making a bottom in 26, 27, and the market heads much higher. So look, I'm not bearish on altcoins and crypto forever, but I do think I've been burned before when I didn't know what I was doing in 2017. In 2018, I just kept buying altcoins all the way down. In some respects, dollar cost averaging over a big period of time was not necessarily a bad move, but had I been patient, had I preserved my capital, there would have been some life-changing buying opportunities at the bottom, and that's what I'm looking to fish out here in the market. So that is my summary of where we are. To answer the question that we posed ourselves at the beginning of this video, is this the early stages of a blow-off top, or is this a market top? I believe it's a market top, a bubble pop. I think equities are going much, much lower. I think the rally that we've seen recently has led to even more complacency in equity and crypto markets, and particularly for altcoins. I just don't see any way out over the next year or so. I think these have to continue bleeding out. They are going to go much lower in USD value and much lower versus the price of Bitcoin. And if you're long-term bullish alts, you know, instead of fighting the market, I would celebrate that. And me personally, I'm going to be preserving my capital. I'm going to be investing in commodities, which I think are going to offer me growth opportunities during that period. And I'm going to be looking at buying the bottom in 2027. So that is the way I'm playing markets. Nothing has massively changed. None of this will be a surprise to people who have followed me for a little while. But I hope some of it is useful to you as you start to shape your thinking. Remember, none of it is financial advice. But if you do find any of this entertaining, valuable, informative, then please do hit the subscribe button. It would be great to have your support.